Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market has been balancing within a range. And if we zoom out, we can see that the market has been balancing for the last 2 to 3 weeks here. And it is now primed for a directional move and a break of the current trading range. So heading into the open, our short-term bias is going to be neutral because the market is in a very balanced state, with the understanding that the market could put in a short-term directional move outside of the recent balance area, the recent trading range. But in order for a directional move to take place, we need to see excess strength or weakness and sustained momentum. So on the upside, we have initial resistance at 75.75 to 77.75, followed by 79.5 to 80.5. And in order for the market to put in any kind of sustained breakout beyond initial resistance and beyond 79.5 to 80.5, we need to see broad market strength via a bullish advanced decline line that is rapidly trending higher and sustained upside momentum via the NYSE tick holding above zero and printing some decent values. If those conditions are present in real time, then it would open the door for a break above initial resistance and 79.5 to 80.5. And because that zone marks the all-time high, beyond 80.5 there is no hard resistance. So in the event that we do get a break above that area, keep in mind that 84.5 to 86.5 is just based on a range estimate. The market could reach that area quite easily, and then 89.75 to 91.75 would be a bit of a range extreme given the current level of volatility. So again, in order to put in any kind of decent breakout, we need to see broad market strength and sustained upside momentum, and a lack of strength and a lack of momentum can leave the market within the recent balance. On the downside, we have initial support at 67.5 to 69.5, followed by 60.5 to 62.5. And in order to get a downside directional move, we need to see excess bearishness via a bearish advanced decline line that is rapidly trending lower and sustained downside momentum with the NYSE tick holding below zero and printing some decent downside values. And then absent any excess bearishness at initial support or at 60.5 to 62.5, again, the market can continue to balance within a range. So given the current market context and given our short-term neutral bias, we have to be very flexible and nimble with our real-time intraday bias. We have to determine whether one side is really dominant on the day time frame, and if we are seeing a lot of broad market participation and momentum in one direction, then we have to be cautious fading that momentum. So essentially the idea is, if neither side is really dominant in real time, then we can consider fading the support and resistance zones. But if we are seeing strong signs of directionality in real time, then it'll be better to trade in that direction and be cautious fading the support resistance zones. So those are the main ideas heading into the open. Let's see if there are any signs of directionality in real time. Otherwise, we will assume that the market is going to continue to balance within a range, but it has been balancing for over 2 weeks, so we know that it is primed for a directional move. It's just a matter of time. It could happen today, it could happen tomorrow, so we don't really know exactly when it's going to happen, but the market is primed for a short-term directional move sometime this week. So those are the main thoughts. Let's see if one side is dominant off the open, and we'll take it from there.